Hello, everyone. Thanks for coming to talk about trade finance today. My name is Jason Karian. I'm the finance editor at Quartz, a global business news publication. Hopefully, you know about it. We have a daily Davos brief email, which there's only one left. It'll come out tomorrow, but please subscribe to that. And I also, more relevant to this case, I guess, I edit our private key crypto blockchain newsletter as well, which I urge you all to check out. So we're going to talk about blockchain and trade finance today. Globalization 4.0, whatever that means, that's happening over at the Congress Hall. Trade finance is greases the wheels of globalization, whatever iteration it's in. But trade finance itself, I think pretty much everyone will agree is pretty far behind. People use email basically. Which is maybe the biggest change there for many decades, and we want to talk about how blockchain technology could maybe help some players in that space leapfrog what's currently happening, create new models of value, trust, et cetera, et cetera. So we're going to get into that. We have a really terrific panel, and I'm going to let them all introduce themselves, and with that, they can talk a bit about what they do, but also to share with the group what they think is most broken about trade finance, or maybe what's the lowest hanging fruit that they're excited about addressing, if you want to put it in a more positive way. So I think I might just jump all the way to the end there to Souleïma.
Thank you. Does it work? Yeah. So hi everybody, my name is Souleïma. I'm a former banker. I left Société Générale after 18 years, including 9 in the commodities business. So I resigned in September to launch komgo. komgo is a fintech, live blockchain-based platform today that we have spent the last 12 months building, basically. Our DNA is commodities. As you mentioned, trade finance is kind of the less modernized place on earth, I think, in terms of ways of operating. But today, I think that in the commodity industry, there's a strong sense that it cannot continue like that because it's too expensive, it's too risky. And because we have new technologies who do answer to those use cases very well. I don't want to say it's broken. The way I see it is more that it has never been fixed, it has never been designed, and everything needs to be built. And this is what we're trying to achieve here. So komgo is backed by a network of 15 shareholders. We have 10 banks, which represent 90% of the liquidity in our market today, and 5 companies. So Shell, Gunvorm, Mercuria, SGS, and Coke, the Americans. Very important for us to have this hybrid shareholding structure because we want to build a solution for the industry. And obviously, if you build it only with banks, you don't answer to the challenges of the industry. So first letter of credit was issued on komgo the 21st of December. So big achievement last year, and we have been doing this with ConsenSys and Kaleido. So I'll let Sophia explain how she managed to ship everything to our shareholders in such an efficient way. And that's all for me.
Great. Well, let's just jump to Sophia. Tell us a bit about. We'll come back. I'll keep you on your toes here.
Sure. So I think you guys can hear me? Yeah. Okay. Great. One of the biggest challenges is really bringing those business relationships and the way business is done today, which can be very paper-based or email, into digitizing that, but bringing what Kaleido is doing is helping people bring that to the blockchain. And Kaleido's a blockchain business cloud platform that really helps bring the stakeholders together quickly to iterate and find where they can get the most value from a certain use case where blockchain could provide that value, and then quickly go from proof of concept to pilot to production. And we'll talk more about that.
Great. Manu.
All right, thank you. So I'm Emmanuel Marchal from ConsenSys. And in ConsenSys, co-lead a group called ConsenSys Solution, which is the part of ConsenSys that work with external organizations like komgo to help advise them and build the platforms. So in the trade finance space, my background is engineering, big data. I've done a lot of big data and artificial intelligence, and also worked a lot on networks. And in the space of trade finance, what I see not broken, but hard to crack is the fact that the largest players don't trust each other. They don't trust each other, they don't trust third parties with their data. And so none of them wants to go on a third-party platform where that party will monetize what they see as their business. And I think that's the play with blockchain, is enabling all these parties to have a common language or common protocol of exchanging the information they need to operate their business more efficiently while remaining in control of the source of their business.
Fascinating.
You know, Jason, I realized I never introduced myself. I just answered
okay.
your question right away. Just so quickly,
Oh, yeah, sure.
yeah, I'm a founder of Kaleido, which is a blockchain business cloud platform. Previously, I was at IBM. I led the IBM blockchain platform business and worked with hundreds of clients, saw them running to the same problems, built various generations there, and then saw there was a big gap in the market. People really wanted a platform on enterprise Ethereum. So built multi-protocol, multi-consensus mechanism, multi-deployment option choice, a platform there. And really, the goal is to radically simplify the adoption of blockchain for these use cases.
Right, great. And finally, Gert, tell us a bit about Tradeshift. You don't just set up really cool churches to have events down the promenade. There's a lot to do with the trade finance.
Yeah, thanks. So, Gert Sylvest, co-founder of Tradeshift. So, our mission in Tradeshift is really to connect companies everywhere in the world to the global economy, so to speak. So we digitize supply chains in the cloud and provide marketplace and payments and financial services. So today 1.5 million companies in 190 countries. And typically we go to the Fortune 5,000 segment, onboard complete supply chains. And yeah, basically digitize what happens there. So today moving roughly $500 billion mostly in the form of receivables and purchase orders. And in terms of what is broken, I think fundamentally why we came into this business was that, you know, we've seen 40 years of digitization of supply chains fail. And typical digital supply chain is a reserve of a very, very small number of large companies and governments in the world. And we felt it doesn't need to be so. So we took a lot of inspiration from social networks. And actually built an open network that is industry neutral and that is free for 99% of the companies in the network to join and grow in. And I think that's the basis for how we moved into the financing.
Great. If I can start with like a very fundamental question, if the digitization of trade finance, just moving it online, just moving it digital, is still, the progress there is still pretty halting. It sounds like, particularly as you move down to like smaller and medium-sized enterprises. Are we getting ahead of ourselves when we talk about blockchain? Is this like a leapfrogging type situation, or are we just talking like proof of concept, and eventually, when we all meet here in 2029, we'll talk about actual use cases?
I think it's becoming very real. Maybe not visible in the press. For 2015, 2016, when the trust machine was announced on The Economist, a lot of enterprise started exploring what blockchain could bring to their operations. One obvious benefit was making the back office operation much more efficient. And so there's been a lot of POCs in 15, 16, 17. And then last year, 2018, is when some of these projects had enough POCs and went live, and komgo is a perfect example of that. komgo is not the only platform that went live last year. We're talking now, it's enterprise production grade platform that are running full networks. And so I think 2019 will be the year where people will realize that actually blockchain is no longer a POC or a pilot type technology, but is transforming business.
So can you go from faxes and emails to komgo to blockchain just from that? There's no...
I think that if you look at industrial revolutions and and technical evolutions, it's not, you don't, how do you say this? You don't need to go step by step. You can do a big jump, I mean, basically, and this is something that happens very often. So I think it is possible if it solves the pain points that people are facing, basically. And this is what we proved when we did our POCs. What blockchain brings to this industry is clearly decentralization. This is very key. It is a decentralized industry. This answers very well to the way it's structured. It brings additional security. Today, when you ship a document, when you send it by DHL, you don't really know if it's going to arrive, and you can bring it anywhere and have it financed 1, 2, 3, 4, 5 times. And this leads to massive frauds in the industry, and it's not theoretical here. I mean, I think you have all heard about cases that have ruined some companies. So security, auditability, and obviously efficiency. So these are the key added values as a starting point. Obviously, you cannot change everything at the same time. So for the moment, we're just replicating the ways of working on a new technology. I'm sure that in the future, depending on the usage that is going to be made of it, we will be more creative from a business perspective. But we need to start somewhere.
How does that work for you, Gert? Like how blockchained is your business at the moment?
So we started definitely as a non-blockchain business, and I think maybe one common misconception is that it's all blockchain or not blockchain. And in reality, I think when you look at a lot of the projects that have traction today, blockchain plays a specific role in it. But there's lots of other technologies involved and other approaches in terms of how you store things and how you ensure privacy and all these kind of things. And that's kind of the way we look at it. So we've driven a lot of volume in our networks, and we think it's a very small step to actually take part of that volume and digitize it. And I think, a lot of the blockchain use cases, they are about exchange of value, whether you're looking at ICO or marketplaces. And I think that's kind of the perfect role here. So to take the resources you have in trade, like receivables, and tokenize them and turn them into assets that can be exchanged in a more efficient way, in a more liquid way. Because I think that's one of the main challenges here, that you have assets in trade that today are highly illiquid because the markets are closed, it's opaque. How to get access to that if you're looking at small and medium-sized companies, you cannot exercise the resources you actually have. And I think blockchain has a potential to play that role of actually making it possible for companies to exercise those resources. But it's of course requires the support of a lot of other approaches like standards, traditional technology, integrations, conversions, all the boring stuff.
Speaking of standards and platforms, I wonder if, Sophia, you could talk a bit about what people are doing on your platform, on your network when it comes to trade finance, or where we talked about pain points earlier, like where's the lowest hanging fruit? What are people doing there that hints at a blockchain future?
Yeah. Well, I think from a blockchain perspective, as people are looking at the use cases and they have a pain point, they think maybe blockchain could help. There's really 3 areas of challenges they'd run into, and we were really looking to help address all of them. So the first, at the POC stage, blockchain is a really new technology, so getting your arms around it. So distributed P2P networks, heavy crypto, heavily Dockerized, new programming languages and frameworks. So a lot of, I think in the early, Manu said, people started 2014, 15, 16. That's where they started. They had maybe the CEO saying, go do something here. And you have the tech team doesn't really have skills in these areas, trying to furiously learn, examining different protocol options and trying to get up to speed and experiment. And oftentimes really just getting stuck at that layer. Sometimes spending months to years, millions of dollars, thousands of lines of code, and radically scaling back the business impact they wanted to achieve because they just had so many problems with the technology layer. And then the next phase is really going to, sorry. Thank you. Thanks. When you're going from a POC, maybe internally with your own team, the next phase is going to a pilot. So now you might have real data. You have 5 or 6 participants that may be friends, they may be competitors, but you're saying we need to do this together. But you have the real data there, and clients, these different stakeholders realize, for the first time we're doing something that, we Kaleido called shared IT. So, in the past, you might have 1,000 applications running in your data center, and your IT team thinks, well, this new blockchain one is 1,001. number 1001, and we're going to stand it up. But it's completely different on a blockchain because you have one copy of the application logic that's spread across all of these members, and you're running that together across everyone's IT properties, which may be on the cloud or on-prem. You have one copy of the data, which is the ledger. So something as simple as onboarding a new member, like, who decides? What's the governance around that? The policies. Do we think there's a smart contract now that's running with the application logic? How do we know it's a smart contract we think it is? That's because now it's all digital. It's not paper-based anymore. How can we verify all the change management around that? So, and then there's the political side of it, which Souleïma could talk about. I think they have a really great structure with how they approach things, but no one wants to join someone else's network. So you have a dominant player in the industry, and I know there was prominent news about this with Maersk in the fall. Competitors don't want to join something that someone else is leading. They want to come to the table as equals. So you need to think about the governance structure there. So basically, from a technology perspective, though, it pilots the tools and workflow just hadn't been built yet. So, we wanted to address that problem. And then pushing into production, you're really marrying all the new problems of blockchain with traditional challenges in enterprise space, so integrating back to your systems and sources data, scalability, reliability, performance, all of that, and then trying to do this in a way that's more native to the investments you have already in terms of skill sets on your application developers, how they work, and then just integrating, for example, the organizational identity tying to an Ethereum account back to your LDAP system that you've spent millions of dollars. So that way, if someone leaves a network, you can just press a button and they're removed from all the systems instantaneously from like a security perspective. So those I'd say are the three layers of challenges. Seeing, komgo, how quickly they've been able to move from the POCs to pilots to production, I think is a reflection of how much the platform has matured so that businesses can really iterate quickly, find that right pain point and use case for blockchain, and then work on the people and the relationship side and building the right network on top of the technology, moving extremely quickly.
Yeah. You mentioned governance there, and I want to talk about that in terms of the ownership of this data, and the kind of suspicion that you have of the big players. And Manu, we were talking earlier about that. I mean, the biggest companies in the world now are based on hoovering up data and jealously guarding it and monetizing it. This is a very radically different way of thinking. How is this going to happen in what seems to be kind of like a natural law in technology now towards single players, monopolies, oligopolies, et cetera, et cetera?
Yeah, that's a very interesting trend. And having spent 10 years of my life in big data, I've been part of how you monetize data. And it's true now you get such a concentration of data in such a few players. I think the global trend when we talk about globalization 4.0, is the trend to get even more in just a few players, or is the trend to re-intermediate all the other players across common networks that they can work together, where you no longer have one controlling everything? And I think that's right now the trend we're seeing. Yes, we're in blockchain, but the trend we're seeing is now participants see that if they want to optimize their business, reduce their costs significantly, it's no longer a play on just data. They're going to have to participate and reduce or streamline the way they communicate between each other. Now that brings an interesting question around business models, because the business model of the web has been to monetize data, get smarter than anyone else at finding patterns in the data and sell that back in another form, or trade off convenience against access to your data. In this large network, data is their business, and they're not going to trade it with someone else. But they need to be exchanged. To exchange for trade finance, they need to exchange between each other. So I think the monetization of networks will be the big thing in the future, and that's no longer going to be data-based. I think you think of the network as the platform, just like you would think, Facebook is a platform or Google is a platform, but it's a single player. Now you're going to see with blockchain, the platform becomes the entire ecosystem of participants. And I know with komgo, one of the things they're trying to do is create an open platform. It's not just a closed group of a few participants, it's open. And the monetization that is going to emerge is going to be fundamentally different from the data one. So we'll see. But I think
Just if I may add on this one, sorry. We did the strategic choice not to have access to any data. And it's kind of a shock for the users of the platform, because they're asking us, but how many transactions do you do? Who is doing what with whom? And for the first deal, basically, we didn't know. And we knew it because SocGen did a post on LinkedIn, basically, and then Mercuria did the same thing. And that's very confusing for people who have been used to giving their data away. So we as a company, we are blind. We don't want to see anything. We don't want to store anything. We just keep everything with the user. And then it comes to your question: how do we use this data? What do we do with it? And what do we do with the network?
I think we already see the answers. If you look at the public blockchains, the value generation is based on the ability for all the participants to work together. So by no longer having a single company controlling the entire ecosystem, you enable for a much larger amount of innovation and creation and participation, participative creation, and eventually enterprise value creation for all the participants in the ecosystem. And so the monetization is no longer to be thought as a single company monetization, but as the network effect of all the participants.
Complicated. Gert.
Yeah, so maybe back to the comment on the privacy, because I think there's a lot of talk about in the blockchain space. I want to say thanks to Mark Benioff of Salesforce, who actually kicked in the doors at enterprises and showed them that you could actually put data in the public cloud and it was not dangerous. So to some extent, I think it's a non-issue. It was solved around 2010 when you had the big flip. Before that, when you went and spoke to enterprises about putting stuff in the public cloud, that was like the 80% conversation, and now it's like, if you don't have a cloud strategy, you're basically out of the door again. So I think in reality there's no concern around that. We are moving. You can count it in percentages of the global trade. So companies fundamentally are okay with that, but I think there are three principles, and I think you guys mentioned some of them. One is actually to understand that they are working in an industry neutral network, so there's no kind of dominant player that's going to take it all. Second one, I think the ownership of the data, and that's fundamentally different than the Facebook world, where people just sell their data and they get a one-trick pony, which is advertising in return. Nobody in the B2B world is going to accept that. And I think number three, that it's very tangible what is the value creation. So, and that's also why I totally agree. It's actually less of a technology challenge. It's more of an economics challenge for companies to understand what are the new economic models that you need to operate under for this to actually be profitable, to create adoption and so on. And that's where the opportunity is, but that's also where I think the adoption gets really hard, and a lot of people will be will be disappointed because they didn't adjust their economic models of how they operate their business before kind of applying the technology.
Is it telling to that point that a lot of you used to work at big conglomerates and now you're at smaller startups and doing new things? Are those players, are the IBMs of the world going to be big players in this, or does it take the new entrants? Is this like a are we at the start of something where there's new players that arise?
Yeah, I think that's an interesting point. I think a lot of the financial services industry participants in the back to 2014, 2015, they've learned enough to see that they don't want to be disintermediated with this next new generation technology that people really believe is going to change decades-old ways that business have been doing transactions and handling business. So I think people have sort of leaned in and tried to be more forward-looking. Just IBM specifically, I think we made a lot of great choices. One was, instead of building something proprietary, building in the open. So donating the code, setting up the Hyperledger with the Linux Foundation, and really trying to build a community. I know on the Ethereum side, there's a tremendous ecosystem. Gardner and other analysts have said around Ethereum, it's about 10x of the amount of developers in that community versus others. But in the enterprise space right now, there's basically the big three, which is Ethereum, Hyperledger Fabric, and I'd say Cordo's more of a distant third there. But I think the enterprises that do this more of an open source approach, very cloud-based, as Gert said, on-premise sort of the software model is not going to get you the iteration and speed you need. And then you do get much better sort of security and the global scale with cloud deployments. And as you said, Mark Benioff sort of opened the door for that in enterprises. I think it might have been easier for them to think about that for more of like commerce and web type applications or CRMs. Now enterprises are really thinking about transforming their mission critical systems that are, EDI for supply chain payment rails built 30, 40 years ago that just can't meet the demands, what they need for the business today. And as your point, leapfrogging to blockchain is that new technology. Has been really interesting seeing that across the globe.
Yeah. Gert, you had something to add?
Yeah, so I think there's a play for all the participants, ranging from enterprises to the new startups. I think traditionally, what the big enterprise players have been focusing on, I would say, is also the enterprises and where you have the big volumes and the big players that are moving a lot of money. So there's definitely a play there. But I think what companies are also realizing that is how to turn your supply chain into an actual ecosystem. Like, how are you going to drive transparency inside of your supply chain? How are you getting people to digitize, which will be critical for your agility? And that means you have to involve the 99.5% of all the companies in the supply chain. That's the small and medium-sized companies. And there you have a fundamental challenge that you cannot just deal with a few very high volume entities. You have to think about how are you going to create value propositions for all these different kind of companies that are part of the supply chain, which are in different industries, vertical sizes, markets, and so on. And that becomes a very different play in terms of the economics involved. Mm-hmm. And the key question in there becomes, how do you share the value in the trade so you actually incentivize people to digitize? Because everyone will resist digitization really hard unless it's super, super tangible. What's the value for me? What do I get out of it?
Yeah. I have lots of questions because that's what I do for a living. But I want to open it up to the floor. We definitely have time, and I can come with the mic if anyone has anything they want to ask our panelists. Yeah. Well, and introduce yourself too, which usually helps.
Yoshi Nakamura, Global Head of Sales and Business Development for Galaxy Digital. We just made a big announcement just yesterday with Citi and NASDAQ and Symbiont. And I think if I could just make a statement instead of that, because I think what these people here represent is a bridge, right, between the IBMs, Microsofts, and everybody else in the cities to this new technology. And that's our focal point of what we're trying to do and continuing to do. Be curious to see, what other things you guys see out there that are actually, where you see big corporates taking a step forward in the enterprise level, technologies that you think is unique and interesting. We would love to hear that, in your opinion.
Unique and interesting things in the big company world.
Well, maybe we can think of where is this going to head, and so here we talked a lot about how now it's possible to create new networks using a platform like Kaleido, because now you can spend just weeks to get what used to take a year. So now this network can exist, and so what it brings is operational efficiency for all the participants. I would call that layer one. The next step is digitization of assets. And here you got a very large amount of value that's being transacted. I know in Tradeshift, there's a large amount of receivable and invoices, and I think that's the second opportunity here with blockchain, which is, brings that ledger, the ability to digitize all the assets, make them actually live on the networks. And that's going to create a second layer of economies. So part of the monetization strategy of these networks will come through digitization of assets. And beyond that, so these networks all start as private networks right now, because they want to work within their circles. But on the other side, you have already 10 years of experimentation and production on public blockchain networks. Bitcoin, Ethereum, these networks are proven production grade, transacting billions of dollars of value every day. And so you can see a potential path where the private network will start leveraging the public network to transact value between them.
So it's not either or.
It's not either or. Just like we had intranet and internet, and the two worlds were totally disconnected, and slowly intranet connected to the internet, the API revolution enabled that connection to happen. Now you no longer think of, I get my intranet, I get my internet. It's obvious, if you're not in the cloud, if you're not in the internet and stop thinking just my intranet, you're in the past.
Hi, my name is Agata Gromova. I'm from Bank Julius Baer, and I have a question to Souleïma. Could you maybe expand a little bit more on the letter of credit that was issued in December? And namely, how did it all happen at all? Because frankly speaking, I have a very general understanding of the blockchain and how this implies to trade finance. And what was the bank and where the banks will be in the future? Would they fall out of the picture or not?
The answer for me is no. Banks will always have a role, but a more focused role on what they're supposed to do, which is originating deals, structuring them, and bringing liquidity, instead of spending days of managing data and documents. What I didn't mention when I spoke about the Go Live is that it was an amazing Go Live also because it was done with another blockchain-based platform. So the way it worked, so this blockchain-based platform is called VACT. It's focused on the energy deals. So it's really post-trade processing of energy operations. And we are very close to them. We have 7 common shareholders. I have been contributing to building VACT over the course of 2017. And so what we managed to achieve is that there was a deal on VACT, a trade recap, so a certain list of data that was sent to komgo, populated directly the LC. Okay, so the buyer of the goods was Mercuria. Mercuria selected its bank on VACT, Société Générale. The seller was Equinor, the Norwegian state-owned company. And so this data was sent from VACT to komgo, which is a huge achievement from a tech standpoint. Here we're talking about, it seems very simple when I say it like that, but it made their lives very difficult over the past month. And so the data was directly inputted into the LC, and this is where you gain efficiency on the whole chain, obviously, because you don't need, as a bank, to take the documents, put back the information inside, print the LC, read it, whatever you name it, okay? The beauty of this whole story is that Equinor made this LC eligible, because obviously, as major companies, they have to approve standard documents. And we managed to have this LC approved by the shareholders and external parties. So our komgo LC today is eligible for Equinor, for BP, for shares, which is also an amazing achievement, and which really shows the intention of this market to standardize at a certain point. I don't know if this answers to your question. It does? Okay.
I have kind of a follow-up on that. Were the players involved in that deal, was this like a new sort of arrangement, or is this the same people that do business with each other, but they're just let's blockchain this?
I know the way we selected our use cases was the objective when you select a use case is to think a use case with a lot of pain points and an easy one to execute. So the use case was on BFOET, so it's crude oil coming from the North Sea. The energy market chose this use case as a go-live use case because they thought it was going to be the easiest one. At the end of the day, it is absolutely not the case, because the kind of transactions when the goods shipped can be sold 20 times between 20 players. So their objective was to net between the first one and the last one. And obviously, they just didn't realize that they wouldn't have all the players in the chain. So obviously, they cannot do that, and it's a big hassle at the end of the day. But it's very vanilla, simple, basic transactions we're talking about here. And the commercial contracts between Mercuria and Equinor already existed before, and they're already active on this. And so what VACT is doing today is onboarding the 25 players of this market. This is also why it was selected, because you only have 25 players on this market.
Would you anticipate pushback from relationship managers at banks who this is disintermediating them? For
no,
sure, right?
it's not. I mean, I launched the commodities business for Société Générale in 2000 in Geneva. In 2009 in Geneva, sorry. And I managed it until last year, so 9 years. And I can tell you that I have seen the life of my team completely change over the course of the 9 years. From a situation where they were spending their time calling clients, doing on-site due diligence, structuring operations, bringing added value in terms of structure, origination, you name it, 2 days where they do 2 hours of KYC, chasing the whole world to have the proper document approved, 2 hours of answering to all the controls the bank needs to do, and because the bank is not automized, the guys, they have to check for the information, and maybe 1 hour with their client at the end of the day. And that's not what a commercial person is supposed to do. And this is the same thing on the whole chain. So I was on the commercial side, but it was the same thing on the LC side, on the middle office side. And it reached a certain point that people were just doing burnout in the office because they were fed up of not doing their job anymore. So my first objective here is to help people refocus on what they like to do and where their added value is.
More questions in the room? Anybody? You want to follow up? Yeah, okay.
You know, we've seen projects get to a point where, you know, they raise capital and they're running out of cash at this point to run their business. So M&A is a big theme that's now coming into our world and we're thinking about. So how are you thinking about that? Because there's a lot of very talented people out there. There are a lot of very interesting projects. Do you see a roll-up of projects into one another? Do you see them just wither and die and take the talent? How do you think about that aspect of the industry?
The Game of Thrones aspect of trade finance and blockchain.
I think it ties back to the, I was talking about private networks and public networks. So there's a lot of initiatives a lot of people are trying to create these private networks or blockchain networks in trade finance. There's maybe 4 or 5 very large initiatives right now and maybe 100 smaller ones. I think what's going to happen is all of these will at some point have to connect between each other. Just like VACT and komgo are now able to exchange key information between their 2 blockchains. And so there's going to be this connection that will need to happen. The smaller players are probably not going to manage to reach enough critical mass to survive unless they specialize in very specific market, in which case they will have their place and will still need to connect to the other network. But it's likely that in the next 5-10 years, you're going to see, 3, 4 very large open network become the de facto standard, and everybody else joining that. So you can see a lot of M&A activity in the next 5 years in that space, I would imagine. Probably not right now. There's only just very few that went in production. All the other ones are in pilot or testing POC. I think in 2019 we're going to see a lot more coming to production. Then we'll see how they evolve.
What you also need to keep in mind is that all those big companies are testing those different technologies, and this is also why you have so many projects, because they want to assess all of them. So it's a bit too early to come to a conclusion in that respect, and this will also explain why those mergers will happen maybe in 1 and 2 years, but not before.
Very, very quickly.
Very quickly, just to follow up on what you just said. Would blockchain not just be or represent the standard that might enable to avoid this kind of consolidation? Is it not the technology that has a de facto standard already globally and would allow many players to connect to this standard instead of merging?
Yeah, it is absolutely. But as Sophia said, there's right now you get 3 main blockchain technology: Hyperledger, Ethereum, and Corda. They're different, and each have their own specificity. The one that transacts the most value today is Ethereum by far. The one that has the largest developer ecosystem is Ethereum, with 300,000 developers, adding 30,000 developers every month. So that creates a potential for it to become the de facto standard for value transfer and trust networks. But then in the enterprise world, Hyperledger has a lot of traction. So it's hard to see which one will become the standard. It's probably going to be, there's going to be 2 or 3 that will have to interconnect, and the connections between the different blockchain are being built right now. So it's likely we're going to end up with 2, 3 major ones, and then the rest.
Great. So we have to wrap up, I'm afraid. Most of our panelists will still be available immediately after to chat about this. I want to give everyone a last word, basically, last sentence. I'm putting you on the spot here, but in a sentence, basically, what are you most excited about trade finance and blockchain in 2019? Start with you, Gert.
Okay, so I think there are two ways to go, and what we are seeing today is like big players connected to big balance sheets, so a few major players with a few balance sheets. And what I'm most excited about is the opportunity to actually connect a lot of balance sheets with a lot of different players in the supply chain. I think blockchain has a special role to play there, and that's basically getting the small and medium-sized companies on board and get access to some of these financial tools which they have not have access to.
Thank you. Sophia.
Yeah, I guess similar along the lines of Gert. I spent about 7 years living in third world countries. One of the things Kaleido's working with are use cases around financial inclusion and developing markets. So I'm really excited with trade finance that, in a very opaque nature today, there's a lot of cost associated because of the risk, and there are a lot of people who can't participate and won't get the credit. So just the small and medium and very small businesses in these developing markets really can get plugged into the global economy in a more frictionless and cost-effective way.
There's really 2 points for me. The first one is for the rest of the market to realize that actually blockchain is now delivered, and we know because we're in the space. But I think everybody will start realizing, okay, it's there. It's no longer fun. The second one is the openness of the network. I think we're going to start seeing the open, transparent properties of blockchains allowing for greater participation, whether large companies or smaller companies or individuals. And ultimately, that's the vision we're pursuing at ConsenSys, is through decentralization, allowing for anyone to participate in the economies.
Great. Souleïma.
Maybe to wrap up all this, being at the forefront of the fourth industrial revolution and having amazing and exciting challenges in front of us to make this happen.
Great. Well, I'm very excited to see what you all do this year, and thank you very much, and thank you for joining us.